Hello, class, and welcome to our 10th lecture series on Managerial Accounting, and I'm your instructor, Jamal Haider. So today we are starting, after mid, a new chapter. It's called Relevant Costing for Decision Making. So let's just talk about the number one learning objective, which is identify relevant and irrelevant costs and benefits in a decision. So what is relevant? A relevant cost is a cost that differs between two alternatives. So what do we mean that? If we have two alternatives, 1 and 2, if sales are 10,000 and in second alternative sales are 15,000, so difference is 5,000. So it means in relevant costing, we are only consider this 5,000, not this one. Or the cost of goods sold are, for example, here 15, not just, I think 8,500, and here also 8,500. So that cost that is not differs, so we will not consider it here. So relevant cost is the cost that differs between these two alternatives. Understand?
Yes.
Let me remove. Oh, okay. So an avoidable cost is a cost that can be eliminated in the whole part or in whole or in part by choosing one alternative. So avoidable costs are relevant costs. So the other name of relevant cost is avoidable, right? Unavoidable costs, they are irrelevant, right? So let's just talk about, so there are two broad categories that are never relevant in any decision making. Number one is sunk cost and future costs that do not differ between the alternatives. So what we are trying to do here, so we are basically learning the what cost we should include or not include, especially when we make decisions. So that's why we're talking about relevant cost in decision makings. So the question arises why we are learning this chapter, why it is important for us to learn that. Because in business world, whether you have your own business, whether you are working for somewhere else. So when you're working for someone else, it is important for you to know whether the proposing project or whether this product will be viable decision to operate or not, whether this product is giving us loss, whether we should discontinue this product or not, or if uh, you know we are given two possibilities to expand our business and our result is the same but costs are different, so which alternative we should go for. And sometimes the alternative looks very bad, but when we you know see the with other perspective, with relevant cost perspective, then that alternative is become very lucrative for us because we are considering some common cost as a cost. So that's why we are learning here, when you are about to make decisions, big decisions, so what you look for in those decisions. So that's why we are learning relevant and irrelevant cost. So avoidable costs are called relative or relevant cost, not relevant, sorry, relevant cost. The unavoidable costs are called irrelevant costs. So unavoidable categories are sunk cost and future costs that do not differ between the alternative. If we pay to our lawyers or to consultants to build up two case scenarios for us, So we have to pay for each scenario. So those payments that we pay for each scenario that are unavoidable, right? We already paid, we cannot recover that one. That is called sunk cost. Okay, let's just move forward. So in order to analyze the relevant cost, we have two-step process. Number one is you eliminate costs and benefits that do not differ between the alternatives. So if both alternatives have a common cost or common revenues, ignore that one. You pick only those differ between these two alternatives. Step two, use the remaining costs and benefits that differ between the alternatives in decision making. These costs that remain are differential or avoidable costs, and then make decision on the basis of that one. So let's do this example here. It's a very common example. We already talked about this before as well, but now we will look at it at relevant cost perspective. So we have your book example, which is Cynthia, a Boston student, is considering visiting her friend in New York. She can drive or take the train. So we have two alternatives: drive herself, drive by herself, or take the train. So by the car, it is 230 miles to her friend's apartment. So she is trying to decide which alternative is less expensive and has gathered the following information. So you see here, wait a second. Amazing. Sorry. So, so these are the breakdown of automobile costs based on 10,000 miles. So you see the annual cost 2,800, cost per mile of the depreciation is 0.28, cost of gasoline 0.1, annual cost of auto insurance and license per mile also given, maintenance and repair per mile also given, parking fees at schools already given. So total average cost is per mile 0.619. So how you calculate the depreciation, since you already uh, went through the accounting subject, so you know that the straight line method, the cost minus salvage value divided by the number of useful life. Simple, that's simple. Here we go. So different costs for different purposes. So costs that are relevant in one situation may not be relevant in another situation, right? So if you just understand that, okay, relevant cost is like these costs. So it means, you know, every time a situation comes, so these must be the relevant cost. No. So relevant cost changes with scenarios as well. So when scenario changes, time changes, it changes, right? So thus in each decision situation, the manager must examine the data at hand and isolate the relevant costs. So here we go. We have some additional information. We have reduction in resale value per mile. We have round trip fare of the train, $104. Benefits of relaxing on the train, we are not given the quantitative term because this is more subjective. So cost of putting dog in kennel while gone, $40. Benefits of having car, benefits of hassle-free, car parking. It's not quantitative. So per day cost of car parking, 25. So we gather some additional information as well. So which cost and benefits are relevant in Cynthia's decisions? So we know that the sunk cost is not relevant, right? So the cost of the car is not relevant. By the way, why not relevant? Can you explain this? Anyone?
One second, please. Because it was stated before, we cannot
Because
affect the non.
Because she didn't buy the car
Not
in
a relevant
order
question.
to just make this trip. She bought it before, right?
She bought it before. Okay. So, for example, we have two alternatives here. This is by car, by train, right? So she owned the car before, right? She already have the car. So whether she go through car or whether she go through train, the question didn't mention that if she go through train, she would sell the car. Car is still with her, right? So whether she opt the scenario 1 and scenario 2, car same in both alternatives, right? So that cost that differs between these two alternatives is called relevant. So this not differ. You still have car in she still have car whether she go to train, or she still have car whether she decide to go through the car, right? So that's why, plus the cost of the car is already paid. She bought it before, right? So it's sunk cost. She cannot recover that cost unless she sell. When she sell it, she may not recover the full cost, right? So that's why it's called sunk cost. The annual cost of insurance is not relevant here. So insurance of the car, insurance, both are present in both alternatives. So she paid the insurance for the whole year, right? So when she paid the whole year's insurance, so whether she drive or whether she don't drive, insurance related to time, not related to mileage, right? So it will be the same if she drives or take the train. Understand? Let me remove this mess here. So the cost of gasoline is clearly a relevant cost, right? Because if she go by car, she need to fill her gas tank, car gas tank, and then she has to pay for the petrol prices or gasoline prices. But if she go through train, she don't have to pay for the gasoline. So it means these two alternatives differs, right? So this is irrelevant. Here we go. So which costs and benefits are relevant in this case? So the cost of maintenance and repair are relevant because the longer you run, the more you need to go for repair and maintenance. So monthly school parking. The trip may be for 2 days, 3 days, or 4 days, but you have to pay for the monthly parking fees. So it is not relevant.